And a warm welcome, one and all. I'm going to talk a little bit about what made me profitable over the years, and then kind of show you a harvesting setup that is how I'm profitable. Now, I'm going to try and keep it as short as possible, because I do know once I start talking, I can talk for England. But at the same time, there's so much to this job. You can't cram it into a few minutes. And I've said it before, and this is where most people will turn off. If you think watching a 15-minute video is going to make you a trader, you are delusional. Absolutely delusional.
Jesus Christ, dude.
So the first thing that made me profitable was I got educated in the art of trading, and it is an art. Now, my education was formed in the long time frames. I had a guy in my office who was an ex-commercial bank manager, and they don't live on 5-minute charts. They live on dailies, 4 hours, weeklies and monthlies. They look at long-term forecasts. So that's what I was taught to look at. And then those long-term forecasts, if you understand where the turning points are, which are essentially your levels, will ripple forward into the small time frames because they are constants. They are the same regardless of what time frame you're looking at. So these things help you. So education is the first one. The next one is common sense. Now, common sense is one of those things that you either have it or you don't. It's not something you can learn. You've got to kind of build it up through experience. Now, my biggest turning point, and this is the key turning point that turned me from being a reasonable trader who was arrogant, cocksure, knew everything because I was a young man at the time, to maybe I need to calm down and treat things with respect. Now I'm going to go back to 2015, 10 years ago. I was top of my field in the industry I was in, good company, but the company weren't doing well at the time. It was doing okay. And this is like a year with Brexit coming up. So it was very shaky for the industry I was in. And there was a lot of rumbles in the jungle. So I was doing something which a lot of traders do. I chased the money as a supplement to an income. Now that is very dangerous. And if you're going down that route, you definitely need to step back and take your foot off the gas. Because if you don't,
jump out the closet, chop your little head off.
That chasing of the money will actually take money away from you, as I found out to my detriment. I had a good streak. I hadn't really lost a trade in a very long time, not badly. But not only had I not lost a trade, I'd been over leveraging and doing pretty much every mistake that was going on. So my position sizes were too big for the account. I was swinging at the fences when I shouldn't be. And, well, let's just say the market taught me a big lesson.
Who'd be stupid enough to do that?
Justify, stupid.
In fact, it wiped out the entire account in 3 days. Hold on. Why? Because I was so arrogant, I believed that I wouldn't be wrong, that I left an open trade across a weekend into a French election in 2015. It gapped up the indices, and the indices kept on moving up for a couple of days when I was short. And this is at a time before you had margin calls that would protect your account. It just wiped the account out.
Shocking, shocking.
Now, when I came back from the break, because I actually left it open while I went away on a short mini break, I was pretty devastated by it. It was a colossal amount of money that I could not afford to lose. It was just on £18,000. Now, £18,000 back then was a huge amount of money, especially when you were building it up. Now, I couldn't really touch the keyboard because I was snake bite fearful of it. But it taught me the best lesson in the world. And it's the lesson that actually made me the trader I am today, because I've never forgot it. I think every trader, in order to become profitable, needs to have a humbling experience to show them how vicious the market can be.
You serious?
Now, once you've got that understanding that the market is better than you start going from trading aggressively to trading defensively. That means you calm your targets down. You understand that if you're wrong, you've got to get out. You put in mechanisms that help you plan that out. So I have a rule set of 1, 2, 3 target, 4 get out where I got in, 5 just get out. It's a rule set that I have. So I've always got an area on the chart where I know I'm wrong. Sometimes that can be pretty brutal, but that area is never big enough that it'll kill the account. So it means I can go to market the next day. Might have a bloody nose, but I can still go to market, because ultimately I'd rather have a slap in the face than a kick in the bollocks.
If you can't take a little bloody nose, maybe you ought to go back home and crawl under your bed.
That's just the way it is. So what else did I learn? Well, I learned that if I pushed the boat too hard, the market mightn't be willing to give it to me. So if I've got a barrier in front of me, well, that ultimately in a day trade is the target. And then once it's hit the target, who's to say I can't go back to market if I haven't achieved my day process? And then finally, I worked out score, score, stop, because you do go to market, you hit it hard, and eventually the market rotates and takes the money back. So single asset, score, score, done. And if I haven't hit the day target, well, tough. Do I break that rule? Yeah, I do. I'm only human.
They've done studies, 60% of the time, it works every time.
That doesn't make sense.
But it's a rule that if I've got the money in the bag, I'll stick to it. I'll walk away. Now, the other one was a traded patience. And just to remind me of this, when I did it, and I didn't touch the keyboard for about 6 weeks afterwards, kind of had a bit of a break. But when I went back to it, I wrote on a post-it note, less is more. And I stuck it on the screen. And I've stuck to that for the last 10 years. And what I've also figured out, and this is something that I worked out in life as well, if you've got your current account, you often have a savings account and maybe a secondary savings account. So it's like your rainy day account, your everyday account, and a bit frivolous money. Well, I do that with my trading pots. I only hold in the broker enough to service the trade. So that means my main funds are always protected. So the everyday funds are there, bish, bash, bosh. And I don't give a toss. If I lose it in a week, well, I'll lose it in a week. But I haven't wrecked the account because the account is somewhere else in the slush fund. So that helped me become profitable by breaking up things. But then I farm trade. Let me give you an example. So if I pull this over, you'll actually see some of my personal rules. Let me just pull them into shot, just so you can see it, which is here. So you filter the strongest to weakest, so I can work out what's going on. Now I look at a singular asset, which is I trade the pound, and then I'll look to see what the strongest or weakest is against it, and I'll work out which is the best asset. Okay. I also have other things where I look for a deep trend and a day trend, and I want them aligning. And then I'll only trade the best setups that I see, keeps me patient, and I align the trigger with the dominant direction. They're basic stuff, okay? Now, also, underneath here, we've got trade one product at a time. I see traders all the time trying to trade multiple products at once. I can't do that. If you can, you're a better trader than me. But inevitably what happens is you split your focus. And if you're trading similar assets, if you're trading euro dollar and pound USD, well, if you're wrong on one, you're wrong on both, if they're in the same direction. It's the same with indices. So down here, if I'm looking at it, I'll filter it into 3 products that I can scan. At least one will give me a trade one product at a time, And then this is the one that I look at. 200 plus is what I'm looking for a day, or 2 wins and stop for the day. I have it in front of me so I can see it all the time. And then further down, my go-to is my golden eye. My second one is +1, +1, -1. And then my third strategy is red light, green light. So I have the rules in front of me all the time. They really help me. Now you'll see there's a trade account behind me, and I'll come on to that in just a second. Now, this is where the tale of 2 cities comes. It's actually 2 accounts. One I was asked to grow aggressively and see if I can double it quickly. And the other one was to grow gently. So if I look at this cash builder, what you'll see is it's had a 10-day winning streak through, and it's grown 17.3% because it started with £100 and the account size is 10p per 100. And as the balance increases, it naturally increases the position size, which will naturally increase the profit. Okay, but it does it slowly, and you can see that here. So it was at 10p for three trades, or 3 sort of trade running days, and it stayed at 11 for quite a while. Now it's just edged over into 12, but I also keep a track of what times that I'm winning the trades and when the day target is done, because I put a day target in, which is basically it's a 10 pip day target there, and it'll count down. Like today I'm 5p over it. Brilliant. So the day is done by 11 o'clock. I'm happy with that. But then I'm doing it on this one as well. Now this one is aggressive. 3 times the position size, but double the target. So I had to look for a product that was very similar to it. And it's just because when I did Traders Day Live, or Scruff Traders Day Live, I was kind of requested to do it. And inside of this one, thought, well, okay, I'll double the target and I'll triple the size because I can use leverage inside a Black Bull account. Now, if you want to use the leverage, it's a good way to go, but you've got to control the position size. Now, when that gets up to about 400 quid, because at the moment I've actually tripled the account in the first week.
I'd buy that for $1.
I'm going to slow that back. I'm going to drop that down to 20, and then when it hits 500, I'll drop it down to 10. Same principle of when you see me lowering leverage. These are the plans that make you profitable. Now, if you drop this down, you'll see there it is there. It'll show you what's going on. So it's made its money. It's running at a rate of 1.5, and out of the 22 trade or 22 positions, 24 of them closed in a profit. I'm happy with that. Now, if I look at the other account, which is kind of this one, and we pull up its history, again, you can kind of see it. Now, this one is aggressive, so I'm in and I'm out really fast. But there's your 100 quid, runs down, you don't get it right all the time. And then it comes down and you got your decent profit there, giving you your sort of 316 balance. That is wonderful. But it also creates an issue. And you might be thinking, an issue? That's pretty darn good, that boy. I like that. You know, you made 200 quid in a week off 100. Well, you're right, I have.
Good job.
So what's the issue? What if I left it in the broker? Now, I'm switching on a Vanguard at the moment. I'm switching on my slush fund because I'm going to show you that as well. And I kind of want to show you something inside of it.
Well, we're waiting.
Okay, so I've flicked over onto the Vanguard. As I was saying, I was kind of trying to log it in while I was talking. I do get distracted from time to time. What we're looking at here is where little funds go. Now, this fund is currently sitting at 122,000, and it's made up from them small accounts, and it's taking 100 quid here, 200 quid there, 50 quid. Because once I've got sort of like 400 quid or so in that black bull, I'll take 100 quid out of it. When I build up the other one, I'll take 50 quid out of it. And you see me do it all the time, because I never hold in the broker more than I need. And I'll repeat that a number of times to hammer it home, because the broker is just there basically as a tool. This is the account. This is where my trading money is. Now, inside of this, you can kind of see, you hear me banter around 30 grand quite a bit. Well, I've put 28,000 in the last rolling year. So I'm quite happy with this. Let me have that. And where's it come from? Well, if we look at sort of the way that this is, the holdings is here. And I have two holdings. They're both globals. And I'll kind of show you where they're held as well. This one is the biggest of the two. This one's emerging markets. But this one is the one where we put 200 quid in an account and we decided to build it up to 10 grand. Well, we smashed 10 grand because we're currently at 14.5. But I tracked that as well back inside of this. Now, inside of this is here. This is the Vanguard pot. Keep on this side what's going on. So start with 200 quid, reset the tax year, move the target to 15k because we smashed 10, and we'll continue on. Now you'll also see that there's little figures here all the time, like how much I'm putting in from the various trading pots that I'm trading at the time. Well, they transpire into this lot, which is the transactions. Now these transactions are all those little withdrawals. There we go. So it's like 25 quid, it's a fiver, 75, whatever. It all just gets dumped in all the time, and there's hundreds of them. You know, well, you can see there's like 21 pages of it just going in and in and in. Now sometimes these things just drop off because the investment don't work that well, and I shift things around a little bit. So I'll take it out of there and I'll put it somewhere else, you know, like here. So we took it out of that global and I dropped it into there. So I do shift things about as well. Now, if we go back to the investments and sort of insight, this will give you an idea of what the regions are. So across those two pots, you can see I'm predominantly focused on North America. And why is that? Well, look at the investment sectors. You know, it's Apple, it's Nvidia, it's places like that. But it's kind of weighted out quite well. But then you've got a little bit of emerging markets coming into it as well, like South America and sort of the Middle East and Africa and Asia, India, that sort of thing. You know, takes down into allocation across multiple different sectors. So this is diversified in such a way it's pretty safe, but it's built from the small accounts. Hope that kind of makes sense. The reason why I wanted to show you is because to become profitable is not strategy.
What?
It's planning, but it's long-term planning against where you put your money and how you use your money. I use the brokers for nothing more than a tool. If it makes me 100 quid, fine. I'll keep 50 for me and I'll put 50 into the trading funds. Well, those 50 quids adds up, and at the end of the month you get a wage out of it. And if you just take the wage rather than everything, you can put the rest of the money in a slush fund, and that slush fund will look after you for the rest of your life. Hope that makes sense. So the moral of the story is, how do you become profitable? It's not the route you think it is. Most people just think, if I have the strategy, I'll be fine. Don't get me wrong, I've got a good strategy. I know when to go to market. I know how to read the conditions in the market, and I show the squad this all the time, and it's certainly in the modules if you look at it. if you understand how that works, there's another element that you must understand. And if you can't understand this, you will never be profitable as long as you're trading. And it's actually derived from my favorite quote: know thyself. If you know what you want, you can plan and work towards it. If you know what your own capabilities are, you can work around it. So if you're not a particularly good trader, then you know you have to be educated. If you're educated and you can't figure out how to make a profit, then you need to have a plan to work around your lifestyle. Because you might be pretty good, but you're trading at the wrong time. And not only are you trading at the wrong time, you're trading the wrong type of trade. So you've got to be able to understand all of these little elements. And once you do that, you'll start finding that, okay, I find this quite peaceful. I find this quite enjoyable. In fact, the day you find it boring is the day you've cracked it.
Really?
But less is more will make you more money than going at it like a machine gun. And I've said it many times, when I see statements and it's like somebody who's taking like 30, 40 trades in a day and they're going from one asset to the next, that doesn't impress me in the slightest, because I know they won't be any further forward next month.
Bring on the dancing girls. Get rid of this idiot. Fuck you. Off.
But if you're trading one or two assets, sort of like a basket of say 3 or 4, you'll be fine. And I'm talking day trading here, guys, not swing trading. Swing trading, you can trade whole of market. But what I would suggest with that is also only trade one product that can lose at a time. So as soon as you've got it to break even, look to open up another, and you can build a portfolio up. But when you're day trading, which is predominantly what most of us do, look at a single asset at a time and see it to completion, then look at something else. But you trade 2 or 3 at the same time, it's a recipe for disaster. But that's my own personal viewpoint. Anyway, I'm easy found. See all my contact in the description. The only contact that I do via direct messaging is through my WhatsApp. Any other is not me. And I have to stress that because somebody messaged me the other day about TikTok. I am on TikTok of sorts, but I don't use any of the messaging systems. And they said, what are you messaging me for? I was like, it's not me. And then when I checked, there was 4 of me on it. Fantastic. And on Telegram, I just don't use Telegram. So if you see it there, just report it, please. Anyway, that's enough of me. I'm going to enjoy my coffee, going to enjoy the weekend, and I'm going to enjoy the spoils of those small accounts. See you all in the next one.